weekend is traditionally one of the busiest for real estate auctions around the country.
Yes, sirree, but with concern about world economic issues. There are also predictions of gloom for our housing market. To discuss the state of play, we are joined by Sunrise host and finance guru David Koch and real estate analyst Louis Christopher this morning. Morning, gents. Now, Louis, we'll start with you. Sydney scheduled to have its biggest auction day yesterday.
That's right, Natalie.
What
we
happened?
had 750 properties go to auction yesterday, and the clearance rate, as reported by various bodies, came in at about 53%. In my opinion, the real clearance rate came in the 40s. There were actually a lot of unreported results. So either way, it wasn't a great result.
No.
What do you mean?
What would you call it?
Clearance rate?
Sorry.
Okay, so during the boom time, so if we look back at, say, 2007, 2009, we were getting clearance rates in the 70s.
Right.
Okay, so when you're getting a clearance rate in the 50s and the 40s, that's a pretty weak market. The worst the clearance rate's actually ever been has been in the 30s, where we actually had 30% at one stage in Sydney back in 2004. So having in the 40s is a sign that the market is pretty flat. Melbourne recorded an auction clearance rate basically around 50% as well. Once again, when you take into account the unreporteds, we're really getting in the 40s. And that's a sign in Melbourne where house prices are definitely falling, and most reporting bodies are actually recording falling house prices in Melbourne as well as other capital cities now. We must remember we've actually had this downturn in the national market since June last year.
What are the unreported, sorry? What was the discrepancy between the official clearance rate and what you estimate to be the actual clearance rate?
Well, I'm glad you asked that, because it's not well discussed in the media. But look, these auction results come from real estate agents. Now, real estate agents tend to want to report good news. When you have a real estate agent that's perhaps heavily reliant on auctions as a mean of business, and they have a bad day, they'll generally will not report to the reporting bodies. They won't tell the reporting bodies that they had, say, a 100% failure rate. They just won't ring in at all.
Really?
So
it's not mandatory.
It's not mandatory. It's totally voluntary. That's exactly right.
Wow.
And on top of that, you have certain reporting bodies out there who basically come from the industry. They represent real estate agents, and it's really not in their interest to report auctions as a bad way to sell.
Right.
Wow.
So it's
Real estate
not
You've got to be careful about those published clearance rates you see.
Stop. I come from a family of them. Let's not bag them, please.
No, there's
from a
many
ladder
good real estate
on the
agents, to be
roof.
fair to say. There is many of them.
Kochie, let's please bring you in here. You're in Europe a couple of weeks ago. Everyone asking, how's the debt crisis going to influence our market?
Look, the big thing about Europe, Nat, and the debt crisis over there is how it affects banks. Now, our banks are plugged into the global banking system. And what you're seeing at the moment is countries like Greece and it's likely Spain and Portugal are basically saying to their investors who have bought government bonds, hey, you're going to have to take a loss on the government bonds you've invested in. Now, most of those investors are the big banks around the world, the big European banks and American banks. If they cop big losses on investing in those government bonds, they don't have as much money to lend. They've got to raise more capital to cover any loans in the future. So we start getting a credit squeeze. Banks go into their shell. They stop lending to each other. They stop lending to their customers. And that means access to credit becomes a whole lot more difficult and will become a whole lot more expensive. That flows through to you and I and people wanting to buy a house, because you go to the bank and for years the bank has basically been saying, how much money do you want, and giving it to you. Well, the next year or two they could be saying, well, bad luck, fella, you're not going to get any.
Well, Kochie, some economists are saying that with fewer people in the housing market, house prices in Australia could fall by as much as 25%. What are your thoughts on that?
Look, as Louis is saying, and look, I really take on board what Louis says, because he's about the only independent property researcher in the game at the moment. So he analyses it really well. As he said, most of the others have a vested interest. But we have the most expensive residential property in the world. That's largely because the rest of the world, their residential property prices have plunged. In the United States by 30 to 40%, in the UK and Europe the same. Couple of big differences between us and the US. Number one, in the US, if the value of your property falls below your loan, you just hand the keys back. and you say to the bank, see you later, fella, I'm leaving, you cop any loss. Here in Australia, you're still on the hook for the loan. So that's a very big incentive for Australians to keep paying their mortgage. And often, at times like this, we just put off selling our house. I think the big thing for the next year or so is don't be in a position to be a forced seller. Make sure you're on top of your mortgage. Make sure you keep trying to bring your loan down. Make sure you have at least 25 to 30% equity in your house, just to make sure, because you don't want in the next year to be going into a market where the bank says, hey, you've got to sell, we want our money back. You've got to try and ride this out.
Okay. Lewis, just very quickly before we go, the recent rate cut, is that going to help things?
Look, it will help somewhat, but as Koshi has rightly said, it's going to be dependent about how much the banks are going to be willing to lend to you next year.
Yep.
We did see a couple of years ago where the banks lifted or lowered their loan-to-value ratio requirements, and that meant that for first-home buyers you had to put down a 13% deposit. We could see that again. It happened in the UK, and house prices fell 20% when it happened in 2008. So it's not without its precedent.
Okay. Should be interesting 12 months. Thank you.